Okay, you can see entering here on the micro with 1 micro as it's traded up into this SIBI, and I'm making room for it to trade all the way up into this run lower. So where this run begins, we have these order blocks. I want to see it go past this and take out the highs. I don't want to see that at all. This SIBI here, this is okay, as in this is enough. That's qualifying my first entry, but it can also trade up, as the 2022 model suggests, into the second fair value gap, and even as far as the third fair value gap, although this is a very tiny common gap, but we have the bearish order block there. So that's 3 PD arrays in the way for it to essentially act as a barrier between my entry price and my stop loss price whilst I'm bearish. If we look at the mini, this is what I'm basing my analysis off. So if I zoom out a little bit, see this is a first fair value gap post 3 drives. This is an idea introduced in the 12th of January Smart Money Concept live stream from ICT. It was a live stream in price action, where if you have a tail soup, you can see this is a tail soup, it trades up above this high, and then the first swing point is put in, that's the short-term high. It rejects into the range, it takes that out again, and then it rejects. The first fair value gap here is a potential trade pattern, an entry that you can take if you're bearish. There's no entry there, that's left open. I wasn't even looking at the chart at this point, but that's just to annotate it. It's overlaying the high of the volume balance. You can see this kind of holding, like it's refusing to leave the range here. It's hovering between the consequent encroachment of that daily volume imbalance and the upper quadrant. And then it finally reaches into event horizon. So event horizon here is from the 6th of February's regular trading hours new day opening gap high and the 16th of February's new week opening gap low. The event horizon level holds it down and incites a run lower, reaches into the upper quadrant, or rather the lower quadrant of the gradient, grading between this new week opening gap low and this new day opening gap high. The reason I'm using these, they're not just randomly selected. This is the nearest new week opening gap. It is the one from a bank holiday Monday, but I'm opting to still use it, although I'm not treating it the same as I would a regular new day opening gap or new week opening gap. I still have that difference in closing and opening price on my chart. So it's kind of bouncing around these quadrant levels. Eventually it gives up, trades lower, and we put in this low. This is just short of our daily low created today. Now, this was created today. It's the day after a bank holiday. The daily low from Monday and the daily high from Monday, you wouldn't treat the same as a daily high on Tuesday or the rest of the week, because that was created on a day with affected market hours. So if there's adjusted market hours based on a holiday event or whatever, the market closes early, then you have to treat pretty much everything on that day differently. New week opening gaps, new day opening gaps, PD arrays, liquidity pools, they all have to be treated differently. I'm going to go into the micro here and add one more. Okay, my trade idea is that it's going to trade down to the daily low with this 750 to 810 macro. Pretty low resistance. There is an S&T between ES and MNQ right now with this low, this low. ES made a lower low, whereas the Nasdaq didn't. I don't anticipate this to hold for long. I think it should just get pressed lower pretty quickly. And I'm executing on the micros inside the pre-market range. Now you'll see I'm only using 2 micros as of right now. There's one entry on that fair value gap, one entry on the second fair value gap. And the entire idea is just to go along with what ICT is doing this year, and I really liked his approach to income-based trading, where you're not going in with heavy amounts of size, and it's just very small amounts of size consistently, a cookie cutter approach. And I want to kind of promote the same thing, because I want my students to be profitable, and this is the slow way, but it's the most effective way. Trying to go into this with 4 minis, it puts you under mental stress, pressure, and it will lead to poor decision making. It's inevitable. If you are over leveraged, you will make poor choices and blow out insanely quickly. So when you're in with 1 micro, the minimum leverage, it's so much easier and so much more relieving. It's like you're trading a demo account. There's no emotions involved almost at all. It's pretty much nil. Now my stop out size here is 18 handles. 18 handles on 2 micros is $72. Yeah, that's not a lot. If this stops me out, am I going to feel any kind of mental stress, fatigue? Am I going to be frustrated? No. No, I might be slightly annoyed I got it wrong, and that fear of losing, eventually, when you're only trading with 1 micro or 2 micros, it goes away. Because really, what is the repercussion to losing? You might lose $70. $70. Most of you trade funded accounts. $70 when you're afforded a $3,000 drawdown, or $2,000 drawdown rather. That's nothing. But when you're taking wins, and you're risking 2 micros, you're probably getting around $150 to $200 wins. That's a risk to reward multiple of 2 or 3. Even if you were trading with a 1-to-1 risk to reward multiple, that is still the best way to do it when you're in with very low leverage, very easy. I'm going to add one more here. It becomes very easy to just use my stop loss is now 7 plus 14 handles with 3 micros. That is 28, 56, 80 something, whatever. It's a very insignificant amount. Now I'm pyramiding in here based on the first fair value gap there, second fair value gap entry, and I pyramided the last one on the bearish volume bounce. And ultimately we're in this macro, I'm expecting it to deliver. The entire point of me making this video isn't to show off technical analysis, it's just to promote a new trading approach. I mean, it's not new, I've been preaching this for a while, but I want to start doing it in front of you more to show you that with only 3 micros, if this, sorry, I should have these right next to each other. If this trade delivers, I'm not risking a lot. I'm risking $80 something after I pyramided in with 3 micros. And my upside is going to be a lot heavier. So my entry here is 593, pretty much 594. The daily low is 558. So that's 35 handles on 3 micros, where I'm risking only 13 handles on 3 micros. That's a good risk to reward multiple, and the risk is tiny. $80 of risk is nothing. But the upside is going to be around $180-ish. And this is a pre-market trade. It's a small contract size across a small range size, and I can still make $180-ish within really only 10 or 20, maybe 30 minutes. And that's pretty good. Even if that was to be my full-time trading income, I could just do that one time a day, and I had some kind of part-time job or a full-time job on the side. That's a very good living, to be honest. $140 every day, or it's just 3 days a week to supplement your current income. I mean, that's good. I wouldn't complain about that. If someone just gave me $140, $180 every couple of days, I'm not gonna tell them no. I'm gonna say thank you. And you can make the market the guy that gives you $180 every couple of days just for no reason. You get in with a very small amount of size. This is 3 micros I'm talking about, and I started with 1, saw a pyramid opportunity, saw a second pyramid opportunity, and I kept entering with sensible pyramiding of positions. It wasn't like I was over leveraging or rushing. It's only 3 micros. And my risk, you'll notice I trailed my stop loss a little bit. I can even trail it again now. So now I'm only risking 12.5 handles. I've probably done the maths completely wrong somewhere, but yeah, this is a way of trading where it's very stress free. Like, I don't feel anything right now. Probably because I'm used to minis. So, but say you're not used to minis and you're just a tape reader. You've just been tape reading for the last couple of months. You shouldn't be going in with minis. Trading should not be numbers flying around on the screen up and down hundreds and thousands of dollars. It should just be comfortable and easy. This isn't a difficult thing that we do. Learning it is difficult, I admit that. 100% it is. Becoming to the point where this becomes easy, that is difficult. But once you're there, this is the easiest job in the world. You sit down at a computer in a comfortable chair at the ideal temperatures. There's no manual labor. You're just chilling. You're just chilling. You're reading price. Here's where it's going. Here's how I get in. Here's the time of day. I'll get in here. I'll get out here. And yeah, how easy is that? Now, when you're in with 4 minis, now that's uncomfortable. And that's not easy anymore because now your blood pressure's going up, your heart rate is spiked, yeah, every single retracement makes you question yourself and you're starting to think, oh my god, what if it goes against me? Should I take profit here? What if it retraces now? This is 3 micros. And you shouldn't feel any of that in this. If you do, then you cut it back and limit yourself to just 1 micro and you can't even pyramid. The easiest, not necessarily the easiest, but the best way of being able to effectively trade when there's a position on is to desensitize yourself. Some of you struggle when you came out of tape reading. I know some of you didn't do the tape reading phase, and that's your own choice, but the students that I recommended go through the tape reading phase, and they did. The struggle that each of you had was that when you got into the trades, there was your decision making was interrupted because now there's money on the line and there's fluctuation on the chart, which is directly affecting the money in your funded account or your demo account. And even on the demo, it can be scary. You have to desensitize yourself. Unfortunately, there's nothing I can say that's going to be magical and it's like a pill that you swallow and magically you'll be able to make all the correct decisions without any of the bad ones. You have to just desensitize yourself, and the best way of doing that without creating bad habits is to go in with 1 micro. If you're going in with minis already, that's not going to work. That's incorrect. The worst approach, because now you're digging in yourself a pit, a pattern where you over leverage now, and trading to you becomes hundreds and hundreds of dollars are flying around on the screen. That's not at all how it should be. I'll take a quick look at the MQ here. Just want to see where we are in relation to this low compared to ES. Yeah. Okay, this is a good candidate for my partial. So 24,572.25. 24,572.25. As I was saying, you have to desensitize yourself. And the only way to do that effectively without creating bad habits is you have to do it with a small amount of size that doesn't affect your decision making. Okay, this is where my audio cuts off. For some reason, I don't know what happened in the recording, but the audio wasn't there. To continue what I was saying, it has to be a small amount of size that doesn't affect your decision making, because if it is a larger size, even if it's 4 micros and 4 micros, it leads to a couple $100 on the screen and that shakes you, that isn't going to yield you a good experience in the chart. It needs to be a very comfortable experience that gradually becomes larger monetarily, but the comfort stays the same. This shouldn't be uncomfortable or difficult. It should be comfortable. It should be easy to look at. You shouldn't feel fear when you're looking at that P&L. You shouldn't feel fear when it retraces against you. And the way you do that is by beginning with the lowest size and then gradually increasing it, not beginning with 5 micros. Even that's too much. When you begin with 1 micro and you graduate to 2, then you graduate to 3, that's how you do this. That's how you succeed in this industry. Okay, that's the execution. Thank you for listening. I'll see you in the next one. Goodbye.